Awesome. Thanks, Nick. So, um, last week we focused on income tax and what a person would have to charge, or what a person would have to pay SARS in circumstances where there's a capital gains, for example, or they're flipping the property and they're basically using it as trading stock. VAT, so VAT is a completely different type of tax. And the considerations here again, one does need to break it down between the property acquisition and what a person pays for acquiring the property and if VAT is payable versus the actual trade that a person's conducting through the property. So in short, if the seller is VAT registered, the buyer would have to pay VAT on that transaction to the seller. Simple as that. In circumstances where the seller is not VAT registered, typically transfer duty would be payable. Now, there are some exceptions to this, and I'm not going to go into a lot of detail on this, but if a person's actually buying a property, for example, and the intention is to trade and run a business from it where you're going to be levying VAT, but the person selling the property to you is not VAT registered, there is something that's called notional input tax. So just so everyone knows, SARS does acknowledge that you've acquired now an asset. You're now going to use this asset and you're going to charge VAT through the use of this asset. So SARS will let you claim VAT back from it. Simply because you're going to be utilizing this, and it's called notional input tax. So you'll buy the property, you'll pay transfer duty, but then you'll go to SARS later and you'll claim the value of the VAT on that transaction because you're going to be utilizing this property for VAT purposes. Obviously, bear in mind that you would have to be VAT registered in order to do this, right? So this is now on property acquisition. There's really only two questions. It's transfer duty and VAT, and which one's payable at any given time. And normally it has to do with the status of the person selling the property, right? Now, insofar as usage of the property is concerned, that's now an entirely different question, because there you are now the owner of the property and you're utilizing this property in order to receive some form of income. Now, so from a business and trade perspective, if you're receiving income and it's above a certain threshold, you would have to be VAT registered. Now, everyone knows this, and everyone knows you hit that threshold, you have to pay VAT. But there are certain exclusions or exemptions to this, and particularly with residential property, there is an exclusion where a person who lets residential property need not be VAT registered or charge their tenants VAT. So that's just something to bear in mind. A lot of people already know this. So most landlords would never worry about this because they just assume that VAT's not applicable. It isn't. Where the problem often comes in is when your accommodation goes from this residential, basically it becomes commercial accommodation. And commercial accommodation, for example, are things like hotels and Airbnbs. Now, on Airbnbs, you're actually supposed to be charging VAT on that transaction. It's short term, it is very guest house based. So it's just something to bear in mind. There are VAT consequences even for residential properties. Just bear in mind also that one of the one of the things that positives is that if you are VAT registered and you have to charge VAT, especially as a property owner, a lot of your expenses you get charged VAT for. So anytime you employ a builder, construction worker, even some professional services companies, security guards, etc., they would be charging you VAT. Now, if you're not VAT registered, how do you claim that VAT back from SARS? And remember, from a business perspective, SARS ultimately charges the end user VAT. So if you're a business that pays another business VAT, you can then go and claim that VAT back from the end user once you've charged your client VAT and paid it to SARS. So ultimately, that you wouldn't actually be liable for much from a VAT perspective. So even as a property investor, if you have enough expenses where you should be claiming VAT back and your property is not residential or normal residential as opposed to commercial residential, registering for VAT isn't actually the worst idea. It might benefit you with a bit of refunds.
Lovely. Thank you very much for that, Bruno.